Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and global markets. I'm your host, Lewis, and I'm excited to have you join us today. We're going to kick off our show with a story that's been making headlines around the globe: the US dollar's recent slide against other major currencies. As we've seen in recent days, the dollar has taken a hit, particularly against the Japanese yen and the euro. This comes on the heels of comments from President Trump about potential tariffs on European goods, as well as concerns over the U.S. debt pile and the impact of the president's tax bill. Now, I know some of our listeners might be thinking, what does this mean for me and my investments? And that's a great question. To break it down, when the dollar falls against other currencies, it can make American exports more competitive abroad, which is a positive for U.S. companies that do business overseas. However, it can also lead to higher prices for imported goods, which could have an impact on inflation and consumer spending. Now, let's take a look at some of the numbers. The dollar index, which measures the greenback against a basket of currencies, has fallen to a 3-week low. Against the yen, the dollar is down over 2% for the week, while the euro has risen to a 2-week high against the dollar. We'll be keeping an eye on these developments and exploring what they might mean for investors and the global economy. We'll also be talking to some experts in the field to get their take on the situation. So, whether you're a seasoned investor or just starting to learn about the world of finance, this is a story you won't want to miss. And we'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show, and I'm excited to dive into our next story. Today, we're taking a closer look at the ongoing conflict between Russia and Ukraine. As you may know, the situation has been escalating, with both sides suffering significant losses. Recently, Russia launched a series of strikes on Kyiv, the capital city of Ukraine, after the first stage of a major prisoner exchange had taken place. The exchange, which saw the release of prisoners from both sides, was hailed as a rare glimmer of hope in an otherwise dire situation. However, the subsequent attacks have raised concerns that the conflict may be far from over. According to reports, thousands of POWs are still being held in both countries, with Russia believed to have the larger share. The Kremlin has shown no signs of backing down from its demands, and diplomatic efforts to end the conflict have been slow going. It's worth noting that the international community has been vocal in its condemnation of the conflict, with many calling for a full and unconditional ceasefire. However, finding a resolution that satisfies all parties involved will likely be a complex and challenging process. As we continue to monitor the situation, it's essential to remember the human cost of this conflict. Tens of thousands of people have lost their lives, and many more have been displaced or injured. The impact on civilians, including women and children, has been particularly devastating. We'll be keeping a close eye on developments in Ukraine and Russia, and we'll bring you updates as more information becomes available. In the meantime, we urge all parties involved to prioritize diplomacy and work towards a peaceful resolution. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to take a moment to discuss some recent developments in the world of international relations and their potential impact on global markets. You may have heard that the United States has announced plans to ease sanctions on Syria, following a meeting between President Donald Trump and the country's new leader, Ahmed al-Sharaa. Now, this move is seen as a significant shift in U.S. policy towards Syria, which has been under various forms of economic sanctions since 2011. The Treasury Department has issued a general license that allows for transactions with certain Syrian entities, including the Central Bank of Syria and several state-owned companies. This could potentially pave the way for increased foreign investment and trade in the country. However, it's worth noting that not all sanctions on Syria are being lifted. The 2019 Caesar Syria Civilian Protection Act, which penalizes individuals and companies that do business with Syria, remains in place. To fully remove these restrictions, Congress would need to repeal this act. The implications of this development are multifaceted. On one hand, easing sanctions could help stimulate economic growth in Syria and provide much-needed relief to the country's civilian population. On the other hand, some critics argue that lifting sanctions too quickly could embolden the Syrian government and undermine efforts to hold it accountable for human rights abuses. From a market perspective, this news may have significant implications for companies operating in the region, particularly those involved in the energy and financial sectors. Investors should keep a close eye on developments in Syria and assess how they might impact their portfolios. As always, we strive to provide you with balanced and informative analysis here on the Riskwiser Zone. It's essential to consider multiple perspectives when evaluating complex geopolitical events like this one. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.